Sup, homie Rares, how you guys doing? Hope all is well. Making these videos, I don't know what the title is gonna be, but if it's something fishy, flashy, just be cautious. The intent here is not to sh to show off or be like, hey, look at my trade, this, that. It's just to help you guys out. It's getting a bit late at night, gotta sleep, but I've been telling myself that I'm gonna make some videos, see if I can help out, because we all been there struggling. Um, I'm gonna try to make a few different videos, and I'm also gonna, if when I post a video, if you guys have a bunch of comments or questions, feel free to post below. Um, I'll respond. So if you want to subscribe, that's cool. If not, no problem. Um, if you want to stay up to date, you want to click notification. Uh, and I made a few videos, but I don't really know how to edit. It's long, but there were some cool lessons that I learned. Some things I wanted to talk about, and HIPAA was one of them. So TraderView separates it down to two, and I just wanted to talk about uh, a lot of the time. So what I'm going to go over in this video is if there's anything specific about this, some tips and tricks, how to improve risk management, um, maybe what to look for. I always try to add value in the sense of what I saw, what's going on, and I always try to add some cool nuggets in there if it helps beneficial. So one of the things that a lot of people ask me um, is about risk management, and I myself always, I take losses. Um, I do decent, but unfortunately, I'm not part of the Twitter world that always makes money. I take losses as well, and one of the things that I always try to uh, explain and say is, you know what, try to match your personality with your trading style. So some people are very rigid. They're like, okay, if I short here at below 4, my risk is above 4, I'm going to cut it. And if that works for you, that's good. From what I have found is, for me, I hold a longer term. I do a lot of research. Some of you guys may know me from Twitter. I do a lot of look through the SEC filings. I look for overhead supply, things like that. And I'm a very discretionary trader, so I don't have a very strict stop, and have multiple entries. So some of the cool key nuggets is, if you always accept the loss. No, man, there's so many things I could talk about. I gotta be focused. Accept the loss. Whatever you're risking, you have to be okay with accepting it. Second, try to have multiple entries if you have conviction and small caps. So here, TraderView divides it into two. In the morning, I was seeing selling in HEPA. HEPA is old CTRV, and back in the days, we were long this a few months ago from like $2, it went to 5, and then it shorted again at high and low. This day, anyway, it's a very interesting company. If I recall correctly, what they did is, was it HEPA? Yeah, so they had a lot of preferred stock and they had converted into warrants. And then in the series, it shows that it's 0.001, but that's not really the price that they can be profitably dumped at. But what I found is the last time when it ran, so they have convertibles at 575, but the last time it ran, it was below 575, and they were exercised. They used a bunch of the warrants, so that told me uh, that the warrants were around 5.4 or something like that. I mean, technically I should go look, but this was a very interesting filing one. Usually the filings are relatively more clear. This was a bit tougher, but I just wanted to put that out there. I had sized up on this because I knew that not only did it have bag holders, but there was also an overhead play. The overhead play was the the warrants. The prefers were converted into the warrants. The price was not 0.001, it was a different price. But at this level, I was fairly confident that they would be exercising some of them, as they have in the past. And I had some notes on them that I can't think on top of my head, but I had the date that it ran, and so I sized in, covered, washed. I saw a base, started covering it, and I knew this is a manipulated stock, so they would always push to the highs, and push to the highs, take out the weak early shorts. So I just followed with them, um, covered up. I usually am not a scalper by any means, as you guys have seen, or you may not have seen. This is just like, I think that this week or 2 weeks, I always try to reflect. My average hold is about 6 hours. So there's nothing wrong with scalping, but I'm just not a good scalper. But in this case, I had a lot of size, I had conviction. I went on scalp mode here. I covered here because I was like iffy. My average here was 380, I think. Yeah, 380 or something like that. I covered some here, locked in and cut it. And the freaking trader view divides it into multiple entries. So I exited completely. So here we go. Look, I think I exited somewhere here. I don't know, somewhere here. And it goes up. I'm looking, the tape is heavy. Somebody, when I posted the chart, they're like, oh, how did you know what the risk was, and etc., etc. It's a tape, multiple entries, things like that. But I had sized in, I think, half a here. Yeah, I think I was half here. And then as soon as I saw this break in the tape, and I was just like, okay, that's it, I'm getting in. I had conviction here. And I think my average was 420. So I added. On the spike, I added confirmation. And then as it was going down, I covered because it broke the lows, and I was like, I'm not covering. Shorted. And here, this was a mistake. So another golden nugget is, even, so if anybody's struggling, anybody that's hearing this, I don't know if anybody would be, but sometimes it's not about whether you win or you lose. It's sometimes you could have a red trade and it could be a good trade. Sometimes you could have a green trade and it could be a bad trade. If you don't obey your risk or you don't do anything messed up, it works out. That's a horrible way to win money, because in that scenario, in the long run, you'll jeopardize your plan. So in this case scenario, I did well, decently, but I was upset at myself here. And the reason why I shorted here, the breakdown, I mean, I shouldn't defend myself, but I did the breakdown because I was like, okay, well, it broke the low, and I think I had size in. I was like 910 in, or I don't know. I was like really healthy size, very healthy average, and I think I had like 5x size on this name. So I was up already like 5R, 10R, I don't even know. It's like a decent amount. So the mistake here is that you kind of want to short a breakdown, and you want to short a breakdown on consolidation. You don't want to be a noob. And so my plan for this was, because of the overhead supply, like I was like, I'm not gonna cover this until 4 p.m. I was like, I'm gonna let this go. This could go to 250, 260, or whatever it is. And here's why this is a mistake. This really, really f's with your mind. So you gotta let it consolidate, and it breaks down, then you add it. If I had not done this, I'm pretty sure I would have shorted here, washed into the covers. But now, I think I had most of my size here, and I had a little bit left I added. But look at what it did. Next time I test this, I'm like, I see soak or something. I covered right as it's about to break. Or I covered before it, because I didn't think it was going to break, so I went like a few cents ahead. of the low, I got filled for a very small size, like 1/5. And then it starts consolidating again. I was like, oh, this poopy, crappy name. And then I shorted here, I covered here, shorted here, covered here. This part, all of this is poopy. It's a weird word, but this is all really bad and horrible trading. So this, I think I gave myself a bad grade for this, even though this was like an 8RR or a 10RR win. I could have made a lot more money. And it all came down. So if this short was here, or if this, okay, this is not hindsight stuff. If this short, if I had shorted this on here, or on here, I don't know, if it broke this key level, I think it was like 364. No, it must have been below 354. If it broke that level here after it consolidated, or here, that's a good breakdown because it's consolidating a channel and it's breaking down. It's not, shouldn't do this. And yeah, it's pretty bad trading. But so here I just shorted everything I had again, whatever I covered here. This is all small core size, and I made a few cents here and there, but not worth it. So that's HEPA for you guys, and I'm gonna make a video on KRTX, and also the other quickly thing we can go over is EYEG. I think this was another name where I have a goldfish memory. This is the one, EYEG. I think it has the data news, if I can remember today. Yeah. So this may be better here. This could explain it better. So I got short in the morning. Everybody was looking to long. They wanted it to be in on the next NXTC, PRTX. It was a phase. It was a data news, and I believe they did. I can't remember on top of my head, but I think it had a bit of overhead. So just work with the core, same concept. Expand your thing out. I'm not saying this is the right way to do it, but if you have multiple entries, have a clear risk in mind. It's not just multiple entries with whatever. If it's a meaner version, Mike Katz posted this. He's a very, very smart guy. You guys should follow him. So have multiple entries, scale into a winner. But if it's a point where like pushes higher and fails breakthrough, that's when you want to add. But always have a risk in mind. So here I was shorting, and I think my risk was off of like, I think 9ish. Yeah. So I shorted here. I was adding to a winner. Shorted here. I think it started at whatever it was, like 920, something like that. And I kept adding. My risk was off of 9. I took a large chunk, or all of it, I don't remember, off. And then I shorted here. It pushed high, washed out, added. I had a lot of size because this is one of the other plays that had a float rotation play, but it looked extremely heavy. And like I said, I don't remember off the top of my head if it had overhead, but volume, small cap, a large portion of times it's the balance between the volume forecast and the amount of overhead. So if a float rotation happens and the overhead supply is a large amount, it will fall. This was there's float rotation happening, and it just looked extremely heavy. And I think I located more, and I just shorted. And I had a really good read. So one thing about me, for whatever reason, I have a really good edge when manipulators are involved, I can really get the good spidey senses on them. So I had some good size here on the back end, reshorting. I knew this was done here, and I remember I think I like again tripled up or something my size as I was working, because I knew this was pretty much done here. Pushes to the high, nothing happens. Big foot rotation. I cover into the washes, and then I slowly rescale back in. I remember thinking I'll be cool with it even if it goes to 825 or whatever. I still had a very good average. I cover like 1/5. So I short here, and then it breaks down the lows, and I look at the tape. The tape, there was the same buyer. Sometimes they have the same behavior. Like the way they were buying here, it's hard to verbalize, but like if you watch the tape close enough, you could sense there's like a hidden buyer there. So I just joined them. I was like, you know what? The hell with this. It's not working. Pushed to the low, and somebody was slowly, secretly taking covering, and I had a very hard time getting shares. I was like, nope, I'm gonna cover all of it. So I covered all of it, and then I was like, listen, don't be a dummy. I had a very good conviction that it was gonna bounce. So then I actually got long. I longed here, and then right as I did that, luckily, I think this was like a 200k candle, pushed up higher, and I'm slowly scaling in here. And my thought process is that it would push above. I think my thought process was above 750 or something higher. I can't remember where the VWAP was, but I think the VWAP was somewhere here. So I long here, slowly scaling in. My risk is off this low or this low. I think probably this low. Like I said, I'm not that strict that as soon as I get here, I'll put hard stop for 2/3 or half, depending on how volatile it is. So I scale in, it's working, I let it do its thing, just chilling. And as it spikes, I sell. So I sold some here, and I actually sold some here, and then I saw the seller get back in. The same behavior that was happened here, reshorted here, and I had to leave the desk. I came back, and I was like, okay, consolidation area, whatever it is. And this is a short. This is a perfect, actually. This is lucky. So this is a breakdown short that I don't mind. So here I covered all of it. Not all of it. A large portion, I think half or something, or something that I can't remember on top of my head. And then I was like, look at all this consolidation area. If it breaks down below this low, I'm gonna cover. Sorry, it should fade. If it broke this low, it should have faded, panicked. It broke that low, nothing happened. And I shorted the breakdown, and I don't mind this breakdown. The previous breakdown, I minded because it wasn't on a consolidation. This I don't mind. And then it broke that low. It broke this low, nothing happened, and I was like, nope, see you later, peace out, I'm done. Covered all of it, and I think into the after hours it pushed higher. And that's EWEG. In summary, HEPA head overhead. If you have issues with risk management, attach your personality with your trading habits. Have a clear risk in mind, very clear risk. If you don't stop out, use hard stops. And that's about it. If there's something you guys want me to go over, you have any comments, any way I could help, put it in the comments. I'll take a look. And subscribe, click notifications. Every time I post, like the first 30 minutes or so when it goes live, I will be there answering questions. So if you want to participate in that, or you care, feel free to ask a question, comment below. I'll respond. So hopefully this helps. All the best. Take care, guys. Bye.